USDCHF on the yearly time frame. So we want to mark our price reaction points and where we are going to be trading from for both position trading, swing trading, intraday, and scalping. So let's start from this yearly. So you can see clearly here the market is bearish. And then we had a pullback here to give us a high, a lower high. So that is what we mark, because the first thing we want to do is to mark our highs and then our lows. And then from here, we see a new low form, price pushes back, the resisted from here comes down, and then pulls back to give us this high, so we mark that high. And then coming also below, you have another high here, so you keep on marking this high, and then price became bearish all the way, pulled back to these other highs here, okay? So once we're done with that, we can still mark. So we have another high, also this, and then we have a low here, and then finally the last low here. So according to this analysis here, eventually the market would be able to come back to this low here, which is our potential support, and then also have this low here, which is our potential support. So once we're done with that, we can begin to look at the individual candles. If you study carefully, what we have marked, these are price reaction points. That is where you have your support or resistance areas, depending on whether we've marked a high or a low. Okay, so that is from the swing perspective. So you want to trade when price is at this key levels of drawn. So once you have that, you can come to individual candles. So we have this strong bearish candle here that broke this low, which we also mark as our price difference. That is an area of price reaction. So once we have that, we are now trading between this area and then this area. Okay, we cannot think so much about this because this and the market has not yet reached there, and this yearly candle has not yet closed. So once we are done with this, we can move to a lower time frame. And on that lower time frame, we also do the same thing. We mark our highs and then our lows, but to be more specific, within where we are trading. So we are trading between this low and then this other high here. Okay, so this is our potential support. And when price reaches down here, there will be a reaction. Okay, so on the monthly, we still have 11 days for the monthly candle to close. So we cannot consider this as a done job yet. So we just need to study strong price break. So if you look at this, on the monthly, there was a strong break to take away this low. So that is our next potential resistance. In case price pull back into this area, there will be a reaction. And from that reaction, that's where we shall look for trades. But then don't forget to mark this other low here, and then also these other lows, because the candles have closed. So once we're done with this, we can go to the next lower time frame, and that will be the weekly time frame. So on the weekly time frame, you can clearly tell that we had a support area here. Okay, so from this support area, we had a strong market break to the upside, breaking these highs here. Okay, so that is our immediate support, which is just near here. And then from here, we see another strong break above this. So that is also another support. So the moment we've done this, we also mark this as another high. This is an area of potential price reaction. So the moment we have this, this is our potential resistance, and price is looking bullish. So what we could expect for short-term trading may be a pullback into this area. If we get a confirmation into this area, then we can buy upward. Okay, so this is the next area we're going to be working with. So for us to get more clarity on this, we can switch to another lower time frame, which will be the daily. And on the daily, you get a clear picture of how we really want to trade, because we had a strong break, retested. So we want to see whether we shall have the second retest, because in this area. So this is the area in which we would like to look for trading opportunities to push price upward. And then when we come to another lower time frame, which would be the 4-hourly. So on the 4-hourly, you want to study price now along this region here. So this is your next support. Okay, so you don't want to just wait for price here, you put a pending order and then price tags you in and then you buy. You want to get as many confirmations as possible. And what kinds of confirmations am I looking at here? you need your patterns here. A bullish engulfing, your order block, your inverted head and shoulders, your double top, double bottom, triple bottom. You want them around here for you to be able to trade. If you don't find them, then there is no reason to actually open and trade, because the market can do whatever it wants to do. It can actually come, react a little bit, then break and continue down. So you just want to trade with clear confirmations. So when you go further for scalping and intraday and stuff like that, you go to lower time frames, you will still see. So if we come closer to even the 15 minutes, so on the 15 minutes, this is the area in which we shall be looking for confirmations. So when you get a confirmation for price to actually trend bullish, that is where you want to trade from. Because as you see from the lower time frame here, we form the resistance. Okay, there is a resistance here that we formed that is proving to be strong. So you don't want to just jump into here. So the best solution to be able to trade, you want to trade after the break, potential after the break of this, retested with to go up there, or because that is an area, or you want to wait for price to come here, gives you a confirmation pattern, something like that, for you to be able to trade. Okay, be open-minded. So these are the price reaction points. So all you have to do is wait. If price reaches our area of interest, we wait for confirmation, entry, and then we can trade like that, like that. These are the areas. We've done that all the way, even to swing positions, okay? Even to swing positions. So you just want to trade when the market tells you to trade after you've prepared for it. So these are the areas in which you exercise your patience. Along these areas we've marked, these are our trading points. And there's nothing more you can do apart from being patient. Wait for trades to come to these areas, wait for confirmations, and then take them. So that is how you simplify your trading, and then you have no more issues